And it started recording as well. Okay, so we'll give it a few minutes just so that people can start joining and things like that. As mentioned, we will be recording it so that we can share on socials and share to all of the current attendees, as well as anyone who's not able to make it today. So yeah, we'll just give it a few moments. And we've got Libby from Form has just joined us, I can see, as one of the attendees. So they're a really incredible personal training company that do a lot of work with us. And after lockdown, I'm very excited to be getting back in the gym and getting into shape again. I've not, lockdown hasn't been kind to me. Brilliant. And we've got Heather Waters has just joined as well.
Hi, Heather.
Hello, Heather. We've got Vicky Holmes and Victoria Burtonshaw have just joined as well. So we'll just give it a few more minutes and then we will get cracking.
I'm just closing all of my windows down, but the one window that I can't close is my cat, so he may make an appearance.
Oh, I hope so. Guess
yeah, I'm just looking at the clock. He may decide to scurry around the room at a frantic pace anytime between now and 2. So
it's going to make it onto one of those best Zoom fails, isn't it? Just come in and crash the place. And
it's like you'll see him hanging from this fish tapestry on my shoulder, just like.
Oh. Right, fantastic. So we're on 1:02, so we'll get this show on the road. So hi everybody, and thank you so much for joining us this lunchtime. So the topic for today is we're going to be looking at growth through investment during the lockdown period, and looking at a post-COVID world and what funding options we might have available to us that we can start taking advantage of. So my name's Heather Gray. I'm the Business Development Manager over at BruntwoodWorks, and BruntwoodWorks forms part of the Bruntwood Group, which has been creating thriving cities for over 40 years now. So we create, we own and we manage an awful lot of workspace and try and create really inspiring environments that help people to grow. So literally everything from individual co-working desks and meeting rooms to fully managed offices and retail space across primarily the North, Manchester, Cheshire, Leeds, Liverpool and Birmingham. So the webinar today forms part of BruntwoodWorks' Spark programme, which is our business support offering for our customers. And it's just really our way of giving something back to the business community. And it also gives me a really lovely excuse to bring brilliant people from the business community on here and grill them about their specialist subjects. So today I've got the wonderful Alex Lennon and Jessica Jackson. I'm going to let you guys give a little bit of background as to your organisations and where you're from, because you'll do a much better job of that than I can. So Alex, you kick us off.
Thanks for the intro, Heather. Hi everyone, my name's Alex from a company called Black Nova Group. So we're a global venture builder. So we're headquartered in Sydney and have been in Manchester for about a year now. So some of you may have heard of a venture builder, some of you may not, but no problem. So it's a relatively new model in the investment landscape. So it combines both investment, so deployable capital, and services for early stage startups to help them scale. So this is accessed by teams in-house at Black Nova, things like your go-to-market strategy, your digital marketing, product and engineering, and recruitment. So all of those things can be put together purely because they're mainly what early stage businesses struggle with. So by kind of accessing those alongside capital, it can help accelerate you along. So yeah, we did have plans to have a US office by the end of this year, but I think 2020 had different ideas, but we have got our eyes on a more global presence. My role, just quickly, is Head of Partnerships for the UK. So launching us into the UK, finding startups and programs that we can partner with. We focus specifically on the Northwest, although we will look nationally as well. So that's us.
Brilliant. And Jessica?
Hello. So yeah, I was just hearing Alex say as a global venture builder, and I say we're a local venture unlocker. So GC Angels, I'm investment director at GC Angels, and we're an early stage investor. So we're focusing exclusively at kind of pre-seed and seed stages. And actually, if you look at Greater Manchester data, we've been the most active at that stage last year and this year, which is good. We support businesses across a variety of sectors. We align with local industrial strategy objectives. So we're talking digital, creative, tech. There's bioscience and aerospace chucked in there for good measure, but actually, typically they tend to raise a lot more money than maybe what we typically look at. But we support businesses that are raising anything from sort of £50,000 up to and including 2 million. Our average raise has been about 350, and our average check to date has been 62-ish at last time I checked. So my role was to kind of really put GC Angels on the map in Greater Manchester, and we've got a broader sort of ambition to support the wider Northwest, and we're very aligned to the North, created to resolve the market gap in the early stage that we get left out a lot up here. A lot of our stats just get subsumed into London data and doesn't actually tell us a lot. So I have actually got some interesting stuff to share with people today about the Greater Manchester market.
Oh, that's wonderful. And I think that's something that's really interesting to pull into this conversation as well, because Alex, I know that your organisation, as you mentioned, are Australian based, and you very much could have started in London and opened your UK site over there. So why did you come to Manchester? What was it about our kind of proposition that drew you over here?
Yeah, well, I think we always wanted to come to the UK, and London was probably the first thing that everyone mentions. But because of that, we didn't want to go there. London's incredibly saturated. Whilst it's mega successful down there, it doesn't really need more support or services or investment. So we were looking at sort of where's the next kind of up and coming areas of the UK, and Manchester seems to just have all the building blocks in place. A really good community, some good programs and funding, really good tech startup scene. Corporates seem to be getting involved quite a lot. It's a lot of the big corporates and banks. You've got the NatWest Accelerator, KPMG, all these kind of things, PwC. So it just seemed to tick all the boxes of something that's nearly there, and with a bit of a push, hopefully it could become a tier 1 spot. So for us, it was just a really good choice. And I think the more we've been here, the more we've realised we've made the right choice. So we're pleased to be involved.
Oh, I'm really pleased to hear that. That's wonderful. Now, I'm really conscious that everybody is going to be coming in at this with different levels of experience in terms of investment and just what that is as a concept and how it might apply to their business. Some people might have, been through a few funding rounds already. Others might be coming at this with complete fresh eyes. So just to kind of level the playing field a little bit, if you were a small to medium business kind of looking to go through investment, what sorts of options or investment models might be available to you? Can you give us a kind of, a newbie's guide, so to speak?
Yeah, so I mean, to set it out at the really highest basic levels, and there are probably other things, but I think it's probably just good to stick with 3 for a good rule of 3, and they end up being debt, equity, and grant. Alex and I deal more in the equity side, but debt and grant are actually very useful for co-investment to unlock equity, which I'm sure we can get to throughout the questions that you've prepared. But I mean, basically, a company will say, well, I can get to here organically, or maybe they can't get to here organically, but what they need is some cash to make that happen, and that's hiring people, developing their product, and so on. And you can approach your bank or other ethical lenders and take some debt on, and that means you pay it back and you pay interest, but all of the business remains yours. Grant funding, they tend to be driven by maybe government instruments or sort of other private pseudo-public entities like Wellcome Trust, Innovate UK, and so on. And they will say, come to us with a project to achieve something, and then you can get some it's often referred to as free money to actually develop that piece of tech or software or whatever it might be. But equity is the more gnarly one of those options, but it's kind of been really sexed up in the US, but yeah, it's actually a bit more complicated for people to think about, but it's got, you know, all of those different options have got pros and cons to think about. So that's kind of a basic scene setting, and an equity basically means, you know, I want money and I'm prepared to give a percentage stake of my business in exchange for that. That's at the very basic level what it means. In order to do that, you've got to establish things like, you know, your valuation. How do you value yourself? What is that individual or fund going to bring to the table that might justify, you know, a higher stake over and above just an exchange of monies, so on and so forth. So, I mean, Alex, I've given a rough overview, but do you want to kind of dive into any of those with a bit more detail?
Yeah, well, I think probably equity is the one that's the most prominent for lots of businesses, I think, because of, right, like you said, Jess, it's kind of taken off in you know, Silicon Valley in the US, and it's kind of spread across the world as this, you know, amazing way to grow your business. And whilst that is true, there are also, you know, things to consider with that. It's not always right for every business to go down the VC route. If you're going down the equity route, you can look at angel funding. So, you know, somebody, a trusted high net worth who backs your business and yourself, typically smaller scale investment rounds than a VC. Angel funding's, you know, a pretty phenomenal way to grow your business if you can find the right angel. I think something we always see is, you know, don't take the first money, you know, try and find somebody that kind of knows your sector, knows the market that you're looking at, can add more value than just money. I think is always, that's probably a rule of thumb for any investment you're looking at. I think, you know, don't just go for the money. Look at the kind of the whole package. Probably a relatively newer version of equity funding is also crowdfunding, which seems to have taken off at, you know, quite a big rate. I mean, there's some mega successful companies, people like BrewDog, who have gone through, I think, something like £70 million of crowdfunding, which is pretty crazy. Yeah. It's almost, I see crowdfunding as almost, you know, running for government. You know, it's a sort of incredibly high profile, high pressure way of raising money. So if you've heard of crowdfunding, great. If not, typically how it works is you'll set out a raise that is then put on a platform. You've got things like Seedrs and Crowdcube and things like that, where you set a target and then you have a limited time to hit that through small investments. So it could be, you know, 1,000 people putting in £10 each from the public, and you typically reimburse them through things like perks and benefits to using your product. So the reason things like BrewDog have done so well through that is because they're a consumer product. You know, there's tons of people that drink BrewDog products, so it makes sense that they've got a pretty good customer base. Whereas if you have a very niche product and something that's very targeted to a business sector, perhaps crowdfunding may be something that's not a route you should look at. But yeah, that's kind of a bit of a deep dive.
Rule of thumb in terms of like maybe business to business tends to work better with maybe equity stuff, whereas business to consumer tends to work better with crowdfunding sorts of model.
Yeah, there's kind of like two forms of crowdfunding, because you can do it like for perks, or you can actually do sort of crowd raises for equity as well.
Okay.
I think, you know, if you're launching a product, like the BrewDog example is a fantastic one. If you're launching a new product and you're kind of already well known for, I mean, you make beer, it's good beer. You want to launch a new beer, but you don't want to take on the capital intensivity of you know, paying for the production and the bottling. You go, right, well, you know, we know how much that's going to cost, so we'll just go out and get that from our customer base, because people know what we sell and they want what we sell. It can be a tougher journey if someone doesn't know who you are, because it is an exercise in brand awareness more than anything else. So actually, you know, a lot of founders will have had a harrowing experience with crowdfunding because they didn't realize the amount of work that goes into it, because it is like running for office, as Alex said. It's a really good thing, because you've got to be like, got to get yourself seen. So it can be a really good thing to do for B2C products. It can work for B2B as well, but I think there are different platforms that pitch themselves at different consumer groups, if you will.
Yeah, that makes perfect sense. So, and that's a fantastic overview, guys. Thank you so much in terms of the different options that people are commonly accessing. And, you know, I guess it's one of those where in normal times, you know, they've each, as you said, got their own pros, their own cons. But the market has changed so significantly over the past 4 months with COVID-19 and with the pandemic, and even things like lockdown has had a really significant impact on a lot of businesses. So in terms of the investors and the sorts of deals that you've seen coming to pass, how has behaviour changed throughout the pandemic, throughout the past few months?
So I was looking at some industry data. So if people aren't aware of Bowhurst, they are a tool which sort of tracks deal completions through like posting of issues of shares through Companies House. And they release very frequent sort of market reports. So they released one in Q1, which was largely, they released one at the end of Q2 and looked at both of those mushed together. And there's some really interesting things. So it seemed to suggest, although it's worth noting that this is nationally, so a lot of this might get leveled out and not really demonstrate what's going on here. And by here, I mean Manchester. But it sort of showed that first time raises, and that could be a business at any stage, if you bootstrapped your way through to turning over millions of pounds, but you decide you want to take it to the next level, have dropped off a cliff. So it was like last year in the same period of time, they were doing about 2.6 billion, and that's fallen to 0.4-ish. Okay. So that's a huge drop, but what that doesn't quite capture for us, and what we're most interested in, is what's going on at the seed level.
Right.
National data looks like it's kind of doing what it was doing before, albeit a 1% fall. And I thought, well, that doesn't feel right, because anecdotally, Alex and I will be hearing from companies where people have pulled out from term sheets. So where they've sort of said, yeah, we'll look to invest. We heard people sort of withdraw from that with the level of uncertainty. New deals are a bit more risky, especially if you already have kind of a group of hungry-mouthed businesses in your portfolio that you've already invested in, so you don't want to see those guys suffer. So they kind of diverted that cash to those businesses. But when I looked at Greater Manchester data and I compared kind of the run rate at which deals are being done since the end of the tax year, because EIS and SEIS deals all get done before March in a mad rush. There's been 5 deals in Greater Manchester between the 6th of March and the 6th of April rather, to the end of June.
Okay, and how does that compare?
That's a 70% drop off based on the previous period. So it's so early that it's really difficult, but it kind of fits with what I feel like we could expect outside of London. But it's not all doom and gloom, as we'll kind of get to, but I think it's kind of fair to say that most of the capital for high net worths is unfortunately based and centered around London in the southeast. That's kind of why we exist, really, to try and address that.
Brilliant. And Alex, what have you seen?
Yeah, I think we can certainly echo that. So there's a few snippets of data from Australia as well. Typically, even prior to COVID, I think established venture capital firms were looking a little bit further up. They're starting to look a bit further up the chain naturally, because they seem to be focusing more on things that were a bit more of a sure thing, or were kind of ready to really scale. But pretty much every data point we look at is that things have dropped off a bit of a cliff. Angel investment seems to have slowed down. But interestingly, I think some of the angels that are investing seem to be investing at perhaps a higher volume, but at a lower deal size. So they're sort of de-risking themselves a bit rather than going 100% on one or two things. Whereas VCs are typically concentrating on the portfolio they've got, propping up deals that were kind of in motion. So a lot of the stuff I was reading was probably similar to Jess with Bowhurst for the UK, but there's it's called the KPMG Pulse Venture Pulse Q2 2020. Pretty hefty report, about 80 odd pages.
Such readable titles, don't they? It makes you itch to start on that. Go on, Alex. You've read it, so you don't have to.
So that looks at lots of global markets as well, but I concentrate mainly on kind of Australia and the UK for us. But it looks like the pre-seed and seed stage of this investment change has been hit the hardest. Things really do look to have taken probably the biggest drop, I think, globally. So this, where are we? So another article, Crunchbase, mentioned that from the same time last year, there was about 4,200 deals announced globally in seed startups. This Q2 is about 1,700. So kind of in line with what Jess was saying, that kind of 60 to 70% just kind of nosedive, which is tough to see. But there are still deals happening, and like the actual amount being deployed is not as bad as it could be, perhaps. So I think there is some positives to come out of it.
No, that sounds really interesting. So, I mean, in terms of as well, you touched on it a little bit then, but the average kind of time for an investment round to complete, what does that usually look like, and what are we kind of seeing now? So, and the reason I ask this is, if you're a business that was thinking, right, well, I need some cash in the bank now, how long would you anticipate kind of waiting at the moment?
Well, it's quite interesting that you used the word waiting. So Alex and I will have, we'll have anecdotes that we'll agonize over together in the pub, or would have in the pub rather, where, well, founders will come and sort of say, I need money and I've got this reason, I need it by Wednesday. And I kind of go, I'm not going to start running at that pace because I know it's not achievable. So in a normal kind of world, I would say to a founder to expect and allow 6 months, because, you start to have your conversations, not all of those will lead somewhere. You need to kind of herd sheep, get everybody together, and things happen and so on. I think with the current environment, I'm saying to founders, if you've got the luxury or the ability, then expand that time. So particularly if you're a trading business or you've raised already, if you're able to take measures to expand that runway, I would say to do that, whether that's, taking advantage of things historically like the furlough scheme, applying for a bounce back loan or a career business interruption loan or so on, just to give you that extra buffer. That's kind of what I've been advising. But just to kind of touch on, with founders sometimes come to services like ours, and I'm sure Alex is as well, where they're like, oh, you guys can invest and you've got like access to a network. Yeah, great, go off and do it for me. And it's like, no, that's not kind of how we operate. We can absolutely amplify you because we want to complete and see deals done, but really founders have to prepare themselves to go out and have lots and lots of conversations and accept that the majority of those will go nowhere, but it's just the name of the game. And actually being smart about those conversations that you have where people say you're too early but come back, make sure you go back, because I have mega respect for people who say we spoke in whenever, this is what we talked about then, but this is where I am now. And I really appreciate that people do that. I think it shows it's good habit to get into, I think, because you never know where things may have changed inside of an organization or within individual circumstances. But
yeah, I'd 100% echo that. It's not the sort of thing you want to rush as a funding entity or as a founder. Taking on large amounts of money should be a decision that you've really thought through and that you're 100% happy with. So if you find yourself either being rushed or rushing, probably best to just take stock of where you're at, understand why you think you're going out to raise, what the reasons you need that much money. Is that the right funding partner for you? These are all things that you should be very, very confident on if you're actually going to sign on the dotted line. Because once you do, things change, expectations change. So it's definitely not something you should be rushing.
No, you're absolutely right. And it's not free money, is it? There's the string is attached to it, and it's a case of making sure that partnership is as good and solid as it can be. So that's great. So it's a case where, there aren't as many deals happening, but there are still deals happening. Roughly 6 to 9 months is how long it will take. So given that things are going to be way more competitive at the moment, and there's going to be a lot more businesses trying to get investment than potentially there are investors looking to kind of, shake hands and start doing business together, what should a small to medium business do to make sure that they're in the best possible position to be successful and to be one of the businesses that does get that handshake and get things going?
Go on, Alex, you go first on this one.
I think the first factor we we always say to businesses is that, investment should be the fuel, not the fire. If you've got significant gaps in your business model and fundamentals, then simply throwing money at the problem is probably not actually going to work. It's just going to make things more complicated. So if raising money is purely to stay afloat, then I can say fairly candidly, you're in quite a tough spot. So always think about, your business model. So if you were to raise money, where would that go? Where are you going to allocate that money to? We hear things like, oh, I'm going to spend £80,000 on marketing. It's like, okay, why 80,000? What's your return on investment on that? Which channels, what results are you expecting? So I think founders should be really clear about their model and how investment is going to help, fuel those parts of it. Because if the results aren't there, that's not a problem. But you should have an understanding of how the investment is going to get you to there, rather than, we're not quite where we want to be, but I think we need to raise. That's a really kind of dangerous territory to get into, because you're expecting that a big pot of money is going to solve your problems, when in reality it's really not. So I think always concentrate on your business fundamentals, whether that's taking on some mentorship or more advisors, finding people that can help guide you through that journey, so that your model makes sense, and then the investment can just accelerate that, rather than trying to throw money at it.
Brilliant. So to fully understand what the numbers look like, where the ideal pot of money would go, and really drill into details as to how that money would be spent. Yeah,
absolutely. Yeah, because it's kind of chicken and egg. Some businesses think, okay, we need money to scale, but you should know where that money is going to go, really. Because if you don't, then it's kind of think, well, why are you raising then? Surely there's more things you can do for free that can help fix that before taking on a huge chunk of money.
Perfect. And Jess, what would you say from your experience?
Yeah, I would say, like everything Alex has said, I think like a lot of what is going to be happening in the market is that businesses are either not going to close, or they're not going to close as much as they expected to. So I think what that therefore you need to be able to do is, if a business comes to me and says, I'm raising, I say, where's your deck and where's your financials? I mean, if you haven't got those things, then you're probably not ready. And then that's another thing. But also that your model, you need to understand as a founder, what is the minimum that you can do, and what are those dials that you can tweak? So as Alex sort of was saying, what are your objectives from spending 80 grand on marketing, but know in your head what you could do with 20 grand or 20, or, whatever that is. And what is the leanest your plan can be? Because the reality may be that you get 3 or 4 months into that time window that we spoke about, and you think, do you know what, we actually can't, I'm using can't afford in a sort of a metaphorical sense as opposed to literal, but we can't afford to really wait any longer. It's looking like we're probably not going to close the fullest extent of our round, but actually we can achieve X, Y, and Z with what we've got outlined. And as long as those investors are comfortable with that and with closing early, then you can get the cash in and just crack on. So we've worked with a number of businesses where they have done that. We've said, look, let's co-invest alongside the angel that you've got on board already, so you can actually get moving with your business plan. You can still have that equity allocation there. So you can still start to talk to investors and be like, well, we wanted 500, we've closed 140 of it. And we've actually started to see this, and this. So you can still get on board, even though technically, you should be getting we should be getting a better valuation. But you can sort of use it to you can stage your raises basically. But one of the things that that I always come back to is, over and above, have you got an investment deck and a financials? I mean, just having them isn't enough. Like, ultimately, if you gave it out to somebody on the street and they open the first page and it's got your business proposition there, does it make sense? Like, can someone look at that and understand who you are and why you're doing it and why it's a good idea? And if you can't get across your business proposition, the cliches in an elevator, but if you can't explain to someone, this is who I am and this is what we do, we make this easy, and someone goes, oh yeah, that makes sense, because ultimately investors see so many decks. So going back to that point, why should they choose yours? well, one, is it relevant to them and their sector expertise? But two, does it even make sense? Can you even get through to them and cut through the noise and help them to relate to a problem that they see in the market that could be addressed? And quite frankly, you can make them some money. So, I think, ultimately that's what it's about. So is your proposition clear? And don't ask your business partner, don't ask your partner who you probably talk to about it every day and just wants you to shut up about it. Go out and ask people you've never spoken to. This is what I do. This is why we exist. Does that make sense to you? And get that feedback and, practice your pitch. Cannot get that across enough.
Yeah, 100%. Because I think it's one of those where, you live and breathe your business and it becomes your baby. And, you start speaking it's really easy to start slipping into jargon and to start assuming that everybody understands your business in the same level of detail that you do. Which is never the case. And, I've been lucky enough to sit on things like the Venture Fest, investment pitching, where it feels a little bit like Dragon's Den. You're in there and you see about 20 businesses all come in and they've all got 5 minutes and they've got to work through, this is what our proposition looks like, this is what the market looks like, and this is why we are in the best position to service that market and why we make sense as a business. And when they had all of those things that lined up, and it was, as you say, that really clear narrative, they're the ones that you can get excited about, and we did see some really unsexy products come through, but when you see how big the market is and how much money that they could make, it makes sense, and they're the horses that you back. Brilliant.
It's interesting you say sort of unsexy products. We often find that it's the problems that are really quite tedious to solve that often have some of the best solutions, because nobody's thought of solving it because they think, oh, it's just always that way. But if you think of the work from home example at the moment and remote working, it's something that people have kind of had a look at before. There's been some huge companies in it, but for the last 5-6 months, everyone's thought this is a huge opportunity for everyone. There's been some phenomenal companies to come out of that. So it's not, if the problem's boring, that's okay. Just make the solution exceptional, solve it in a really interesting way.
Yeah, that's fantastic. And in terms of as well, so if you have listened to all of this so far and think, do you know what, my business, it does make sense, investment does sound like a good option for me, I know what money I'd need to raise, I know how I'd spend that money, or maybe you don't know all of those things yet, but you think, this is an avenue that I want to explore more, and you want to get those decks ready, you want to get the pitches ready, you maybe want to try it out. If you're right at the start of that journey, where could you go to access support or resources?
So, someone like the growth company, which GC Angels is a part of, has got a business growth hub, which the clue's in the name, that's what it's there for. And there's a whole variety of programs and business support services that are free to access. So there are programs where you can sort of get on, and I think Spark to Scale, Got Greater Connected, and depending on kind of how, and I use this word in the nicest way, but how mature your business is and where the support is that you need, whether it's how to set yourself up operationally is one of those, right through to, we've got the global scale up, we've got the creative scale up, there's there's a green growth hub if you're in that space. So there's a whole host of different things that you can sort of tap into. I know, and a lot of the problem can be there's so much support, so how do you know what's the best or what's out there? And I think the key is to just go and have a browse, see what's there. I know you said you had Heather Waters on the call from the NatWest Accelerator. Accelerators are a fantastic way of accessing support. They can give you procurement ins if that's maybe where you are. If you're a fintech and you think, yes, I need to tap into NatWest, they can help with things like that. But also they have, access to other high net worths or experts and mentors, and there's just so many things out there. And I would just say try as many of them as possible that you can. obviously be mindful of your time and just be a little bit brutal and say, like, this isn't valuable, I'm not going to spend my time here, but actually this has been really valuable. Yeah. One of the services that we have is access to finance as well, and they can help businesses that are maybe looking at, yeah, maybe I want a grant, but actually I'm not sure, and they can sort of say, well, here are a load of sources for these different types of finance, but actually you really need to get your financials built and your deck in order. Let's spend some time on that. So we work really closely with that team, because we look at stuff that has been through that investment readiness process. That's not to say that improvements aren't always continually made, but we sort of receive those guys that sort of come out the other end of that.
Yeah, I think Manchester's got so many different options, like you said, Jess. There's literally no shortage of things out there, but often people don't always know the routes to them. So referrals are probably one of the most underrated ways of finding these things. You know, if you're an early stage founder and you've gone through kind of half one of these programs, you've probably connected with, you know, a handful of other founders. Some of them might have had a great experience somewhere else. It's just a case of asking. You know, if you don't ask some of these questions, you're never going to find out. And referrals are probably one of the most sort of reliable ways to find things that are right for your business. Because if it's someone that's a similar stage to you, they've got similar needs and they recommend it, chances are, it's not guaranteed, but it kind of increases the chance that it's going to be a good fit. So just ask, you know, just block out some time and ask your friends and ask for help.
That makes sense. And I guess as well, it's one of those where it's not a case where you can only do one, is it? You can maybe try a few different ones, so you don't have to feel scared about making that first step and think, right, well, this is it, this is my path now. You know, if you find that it doesn't work for you, well, look at a different accelerator, you know, speak to a different network.
Yeah, lots of startups that I know are kind of, they sort of accelerator hop. But it's really great because at each one, you know, there's a new network, there's different experts, there's different this, there's different that. And the people who get the most out of it go, I'm going to go there. These are all of the people that I want to talk to and that I want you to introduce me to. You know, make them work. They're there to support you. Make them work. But go in there. These are the intros that I want. This is what I want to achieve. I want a mentor in this sector. I want this. And, you know, if they can't do that, then fine, go somewhere else and get it. Just be brutal about what it is that you want to get out of things.
Fantastic. Thanks, Jess. And I guess it's one of those as well where, you know, you guys, I hope you don't mind, I'm probably going to be sharing your details out with the attendees here today if they want to, you know, find out any more about your expertise. And, you know, so much of it is about finding the right advisor that you feel like you can connect with and that, you know, you've got that personality fit with and that rapport. If you guys do have any questions as well, attendees today, feel free to pop them in the chat and we'll come to them in a second. But I guess as well, if you are a little bit further ahead in that journey and you've, you know, maybe done an accelerator or two and you feel a little bit more prepared, but now you need the introductions and, you know, the connections to potential investors, where can you find those?
So obviously our business model, we started out life way back when as an angel network, and we've kind of built around our structures and our fund around that. So that is part of the service that we offer. But I always signpost people, particularly if they're outside of region, for example, and we might not be able to help or have the capacity to take on more clients. I always flag them to the UK BAA website, where if you go to members, because it's not like it's their members as UK BAA, but you can actually search for angel groups and funds that match your sector. So if you have a green proposition, I always point people to Green Angel Syndicate, because you're probably going to have the best luck with someone who invests specifically in that sector. Mm-hmm. But I always sort of point people there and say, you know, have as many conversations with as many different networks as you can. There are a lot of introducers out there, and you know, there are some individuals who will claim that they can introduce you to people and then try and make you pay up front. And what I would say is never do that unless there is a clear delivery plan. There is just so many things that are free to access that it just doesn't feel right to me that there's a way that you should pay up front. And I think Alex and I probably are aware of a number of people who sort of rattle around Manchester and say they can do X and Y for founders, and we know it's not the case. So just kind of be on your guard a little bit, and if something sounds maybe too good to be true, then it probably is.
Yeah. Yeah, there's a couple of programs I've seen that for businesses that are a bit further along. So once you've really started to hit your strides, so it's Tech Nation, I think, is doing some pretty awesome work, and they've got programs designed for different sectors like AI, fintech. They've also got things for different stages, so from Rising Star to Future 50. So check them out. They're government backed as well, so they're quite accessible online. Loads of stuff. And there's a few other kind of corporate programs we've touched on, like the NatWest Accelerator. There's things like PwC Scale, which is kind of using the network and expertise of a huge kind of top 4 consultancy to plug you into that ecosystem as well, and see if you can benefit from that. So it really depends what stage you're at. There's things out there for different horses for different courses, as they say. So whichever stage you're at, just research as much as you can around businesses that have gone through similar things. You'll find no shortage of things in Manchester. It's just knowing which one's right for you, I guess.
Fantastic, thank you, Alex. And I think as well, even just today and this example of you two, the fact that you guys know each other, you're in similar networks, and again, I've been at events with you guys before, and I've seen how welcoming and how warm the startup community really is, and that it is a case where it just feel free to get in touch with one of us, and we can pull you in and start making the introductions that you need to do to get that ball rolling. It is a genuine case where everyone wants to help each other, which is a really nice position to be in. We're very lucky. It's a good northern friendliness and hospitality. So that wraps us up really nicely. Thank you so much, guys, for sharing your expertise today. I really appreciate it. And I feel like I've learned absolutely tons. I feel in a much better position to be able to articulate what's going on in the investment market at the moment. I'll be sharing your details with the attendees today, and if people are watching this at a later date on YouTube, again, our details will be at the bottom in the comments section, so feel free to get in touch and you'll definitely receive a warm welcome from us. But thank you for joining us today, and yeah, fantastic. Have a great afternoon, everybody.
I just wanted to close by saying one thing, guys. I know there's a lot of doom and gloom around, but in the dot-com crash, Google and PayPal were founded. And in the global financial crisis, Airbnb and Dropbox were founded. So it might be tough right now, but there's a chance to do something pretty special if you just keep your head down and find the right option. So yeah, don't think it's all doom and gloom.
Yeah, there's always opportunities in adversity.
Yeah.
Cool.
Wonderful. Thank you so much, guys.
Cheers. Thanks, Heather. Thanks, everyone. Cheers, Jess. Bye.